Hello, friends. Did you know that the federal government completely rewrote the Supplemental Security Income housing rules, making it easier than ever to get a massive pay raise on your monthly check? For decades, if an SSI recipient lived with family or rented a basement apartment below market value, the Social Security Administration punished them by slashing their check by exactly one-third. But thanks to a massive nationwide rule change that is fully active for 2026, those penalties can now be legally erased. Today, I am showing you the new 50-state rental subsidy expansion, the exact magic number you need to put on your lease, and how to force the SSA to restore your check to the $994 maximum. To be clear right up front, this isn't a new stimulus check or a one-time refund. This is an official update to existing federal SSI living arrangement regulations that allows you to claim your maximum legal benefit. Make sure you stay until the end, because if you currently pay your family a flat fee for room and board, that exact phrasing on your paperwork is likely causing a computer glitch that steals hundreds of dollars from you every month. I will show you exactly how to fix it. The rules around your benefits change every year. The government never explains your options. Subscribers find out in time. The others find out after the money is gone. Take a second and subscribe to the channel right now. This specific financial boost helps any SSI recipient currently receiving less than the 2026 maximum of $994 a month because they live in a shared household with others. Let me explain the old one-third reduction trap. Historically, the agency aggressively enforced what is called the in-kind support and maintenance rule. Under this old framework, if you lived in someone else's household like your son or daughter's home and received free or deeply discounted shelter, the agency applied the value of the one-third reduction penalty. They automatically slashed your maximum federal benefit by exactly one-third, assuming someone else was paying your way. You have to review your personal records immediately to see if you are a victim of this deduction. First, pull out your most recent 2026 SSI award letter, or log into your portal to look at your monthly bank deposit. Second, check the exact dollar amount. If you are an individual and your monthly check is exactly $662.67 instead of $994, you are trapped in this penalty track. Third, recognize that this reduction is no longer mandatory under the new rules if you restructure your living arrangement and report it correctly. Look at David from Ohio. David receives needs-based SSI because of a severe chronic health condition. When his expenses spiked, he moved into his daughter's spare bedroom because he couldn't afford $1,200 a month for a standard apartment in town. Because he was staying there rent-free, the agency hit him with the standard one-third reduction. The 2026 maximum SSI federal benefit rate for an individual is $994. A one-third reduction comes out to exactly $331.33. That penalty cut David's check down to $662.67 a month. Losing $331.33 a month costs him $3,975 a year. Over 5 years of living with his daughter, this single living arrangement trap drains $19,875 directly out of his fixed income. Your filing status determines the exact penalty cap. An individual trapped in the one-third reduction loses $331.33 a month. An eligible couple trapped under the same rule faces an even larger hit. The 2026 couple maximum is $1,491, so their one-third penalty slashes their combined household check by $497 every single month. But the government just made two massive changes to how they calculate this penalty, and the first major shift involves your monthly grocery bill. This breakthrough applies directly to SSI recipients who receive free groceries, cooked meals, or food delivery assistance from family members, friends, or local charities. In a massive policy shift fully active for 2026, the Social Security Administration completely eliminated food from the in-kind support and maintenance calculation. Receiving free meals or groceries from your family no longer counts as unearned income, and the agency can no longer use it to reduce your check by a single penny. To remove this food penalty, you must update your file using these steps. First, recognize that if your check was previously reduced because you honestly told the agency your family helps buy your groceries, you must take action. Second, call the main hotline at 1-800-772-1213. Third, state clearly that you are reporting a change in living arrangement. Fourth, Inform the representative that while you still receive food assistance from your family, federal law no longer counts food as unearned income, and request an immediate recalculation of your benefits. Take Susan from Florida. Susan manages to pay her own rent, but her son buys her $300 worth of groceries every month, so she doesn't skip meals. Under the old rules, the agency counted that $300 in food as unearned income and reduced her check accordingly. Under that old framework, the agency took the $300 in food, subtracted the standard $20 general income exclusion, and reduced her check by $280 a month. But under the new 2026 rule, that $300 in food is completely ignored. By reporting this change, Susan's check jumps back up to the full $994 maximum, gaining her $280 a month. That simple phone call restores $3,360 a year to her bank account. How the food is given controls the tax code. Receiving physical food or groceries directly from your family is 100% exempt from penalties. But receiving direct cash from your family to go buy food yourself still counts as unearned cash income, which reduces your check dollar for dollar. Your family must buy the food directly for you. Because food is completely off the table, the agency now only cares about shelter, which brings us directly to the most powerful nationwide loophole of 2026, which means you have to understand the 50-state rental subsidy expansion. This life-changing update applies to SSI, recipients renting a room, a basement, or an apartment from family or friends at a heavily discounted rate. Previously, the agency used a brutal calculation. If you rented a room from your son for $400 a month, but a similar room in your town cost $1,200 on the open market, the agency looked at the current market rental value. They counted that $800 difference as a massive subsidy and immediately slashed your check. For years, a safe harbor exception to this rule only existed in 7 specific states. But as of late, 2024, and fully rolling into 2026, this rule was officially expanded nationwide to all 50 states. To use this expansion to your advantage, you must alter your living agreement. First, acknowledge that you no longer have to pay the actual expensive market rate to avoid a penalty. Second, you only need to establish a business arrangement with your family member where you pay a specific, federally capped minimum amount. Third, if you pay that exact capped amount every month, the agency will completely ignore what the actual market value of the apartment is, shielding your check from the 1/3 reduction. Look at Robert from Texas. Robert lives in a family-owned apartment that usually rents for $1,500 a month. Because he is on a fixed income, he pays his brother $400 a month in rent. Under the old nationwide rule, the agency saw that $1,100 discount as a massive subsidy. They applied the maximum penalty, reducing his check by $331.33, leaving him with just $662.67. But under the new 50-state expansion, because his $400 rent payment clears the federal minimum, that $1,100 discount is legally ignored. His check is instantly restored to $994. He gains $331.33 a month, restoring $3,975 a year to his wallet. Where you live changes how you must act. If you are living in New York or Connecticut, you already had this rule for years, and your check is likely fine. But if you are living in the other 43 states, this is a brand new rule that you must actively call the agency to apply to your current living situation if you are currently being penalized. So, what exactly is that federal minimum amount you have to pay to trigger this protection? It all comes down to a math formula called the PMV. This rule is vital for anyone drawing up a rental agreement for an SSI recipient to legally bypass the shelter subsidy penalty. The new nationwide rule states that if your rent payment equals or exceeds the presumed maximum value, no rental subsidy exists in the eyes of the government. The formula for the presumed maximum value is exactly 1/3 of the current year's federal benefit rate, plus $20. For 2026, 1/3 of the $994 rate is $331.33. Add the extra $20, and the magic target number for an individual is exactly $351.33. Here is how you use that math. First, calculate the current year's target number. Second, if you are paying rent to family, you must ensure your monthly rent is set at $352 or higher. Third, If you currently pay $250, you need to voluntarily raise your rent to $355. Fourth, by paying slightly more in rent, you cross the threshold to trigger the federal safe harbor and get a massive increase in your SS. I checked that more than covers the difference. Take Linda from Arizona. Linda was paying her daughter $200 a month to live in a finished basement. Because $200 is below the $351.33 target, the agency charged her the difference, which was $151.33 as unearned income. After applying her $20 disregard, her SSI check was reduced by $131.33, leaving her with $862.67. Once she learned the new rule, Linda and her daughter tore up the old lease and signed a new one for exactly $355 a month. Linda pays $155 more in rent to her daughter, but her federal check jumps all the way up to the full $994. She nets an extra $131.33 a month from the government just by crossing the threshold, saving her $1,575 a year. Your marital status changes the math. An individual SSI recipient must pay at least $351.33 a month. An eligible SSI couple calculates their target on the $1,491 couple rate. One-third of that is $497. Add the $20, and a couple must pay at least $517 a month to their landlord to clear the penalty. But if you just hand your family member $400 cash and do not properly document what it is for, the SSA computer will reject it because of phrasing. Which brings us to the room and board documentation trap. This trap crushes recipients who live with family and pay a single flat fee every month to cover their existence. Because food is no longer considered under the penalty rules, combining your food and shelter costs into a single phrase like room and board deeply confuses the agency's archaic processing system. If you tell a representative you pay $400 for room and board, an examiner might assume you are sharing a household's pooled expenses and incorrectly apply the one-third reduction anyway. To prevent this automatic reduction, you must change your vocabulary. First, never use the phrase room and board when speaking to a representative on the phone. Second, never write room and board on the memo line of your rent check. Third, you must explicitly state that your monthly payment is strictly for rent or shelter liability. Fourth, purchase your own food separately or have your family buy it for you at no charge to you, but keep the rent transaction entirely isolated on paper. William from Michigan paid his son $400 a month and casually told the agency it was for room and board. The examiner immediately applied the one-third reduction, cutting William's check to $662.67. William lost $331.33 a month because of 3 poorly chosen words. He filed an appeal, stating the $400 was strictly for shelter and rent, and noted that his son provided food for free, which is completely exempt. The agency corrected the official record. Because the $400 rent cleared the target minimum, no subsidy existed. His check was instantly restored to $994, recovering his lost $3,975 a year. Your payment method proves your case. Paying cash without receipts means the agency assumes you pay nothing and they apply the maximum penalty. Paying via a traceable bank check with the words "Rent for May" clearly written on the memo line creates ironclad proof that forces the agency to honor the rule. To make this completely yet not just make a verbal claim, you have to establish a formal paper trail. This requires establishing the formal lease and handling Form SSA-L5061. This action applies to any SSI recipient renting a room, a basement, or an apartment from a family member or friend. To qualify for the rental subsidy exception, there must be a bona fide business arrangement under the law. You must be legally liable for the rent. The agency verifies this by requiring a written lease agreement or by sending a letter to landlord, which is Form SSA-L5061, directly to the family member who owns the house. First, draft a simple one-page written lease agreement between the SSI recipient and the homeowner. Second, state the exact monthly rent amount, making sure it is set above the $351.33 target, and specify that it covers shelter only. Third, both parties must physically sign and date the document. Fourth, When the agency sends Form SSA-L 5061 to the homeowner to verify the living arrangement, the homeowner must confirm that the exact rent amount matches the lease and affirm that the recipient is legally required to pay it. Look at Charles from Nevada. Charles moved into his sister's house. They drafted a formal lease for $360 a month. The agency mailed the sister the landlord verification form to fill out. Because the sister confirmed the $360 lease on the official form, the agency recognized the business arrangement. Charles cleared the target threshold, so no housing subsidy was charged. He kept his full $994 a month. Without that signed piece of paper, he would have defaulted to the $662.67 reduced rate, losing nearly $4,000 of federal money a year over a simple lack of paperwork. Your preparation dictates your processing speed. Having a formal, signed lease ready before you call the agency means your change is processed quickly and cleanly. Telling the agency you have a mere verbal agreement means they will trigger a full household investigation and delay the restoration of your check for months. Once you have your lease in hand, here is exactly how you file for your massive pay increase by reporting the change. This final step applies to any SSI recipient currently suffering from a reduced check who has now restructured their rent to meet the rule. You must understand that the agency does not automatically update your monthly check when these national rules change. You must initiate a change in living arrangement to force a manual recalculation of your benefits. First, call your local field office or the national line at 1-800-772-1213. Second, state clearly to the representative, I am reporting a change in my living arrangement and my shelter liability. Third, submit your written lease showing your rent exceeds the 2026 threshold of $351.33. Fourth, request that the in-kind support and maintenance penalty be removed from your record immediately. Fifth, wait 30 to 60 days to receive an official notice of planned action letter detailing your new, higher benefit amount. Look at Mary from Pennsylvania. Mary had been getting the reduced $662.67 check for 3 long years. She signed a new $360 lease with her son and called the national line in January 2026. The agency processed the change effective the very next month. Her check increased by $331.03, hitting the $994 maximum. Over the next 10 years of her retirement, successfully filing this single update secured her an additional $33,103 in federal funds that she was legally entitled to under the new rules. Your speed in filing dictates your wallet's health. Waiting for the agency to notice the new law on their own means they never will, and you permanently lose $331 a month. Actively reporting the change with documentation means your check is permanently boosted the very next month. Let me bring this all together. Review your award letters to see if you are stuck under the old penalty. Keep your food assistance completely separate. Ensure your rent clears the $351.33 target number, and never use the phrase room and board on your paperwork. Establish a formal written lease, have your family fill out Form L5061 accurately, and actively call the agency to report the change. The massive 2026 SSI rule changes eliminated the food penalty and expanded the rental subsidy loophole to all 50 states. This means if you establish a formal lease with your family for at least $351.03 a month, you can legally force the SSA to restore your check to the absolute maximum.